Hello, everybody. It's good to see you. We are a very strange company. We've been around for about 15 years. Got about 5,000 customers now. And we have this strange thing where we predict which directions markets are going to move in the future. And the program that we're going to be looking at today is called TachEon Warp. It is a predictive indicator, meaning that the signals are coming on the right-hand side of the chart. Right now, if we're looking at Apple on a daily chart, we see that the present signal is a selling pressure signal, a pattern 2 on November 21st, and the next signal coming is December 12th. If we use our splits technique where we split the signals into thirds, we'll see that we had another indication of a possible punch up on September 29th, and now right here from December 5th until December 12th, we should see consolidation. There is selling right here, and it wouldn't be surprising if we kind of stay inside of this zone. The next push up here, though, is projected to be on the 12th of December. And if we look back and kind of get a feel for what was expected and what the program warned us about, we can see 1, 2, 3, 4, 5, 6, and then a punch out of the pattern 5, 7, basically 6 or 7 out of the last 7 signals were pretty good warnings as to what was coming next. There is a trend line in Apple that we're tracking, this angle right here. If we move it up till this point, you'll see that we're sort of outside of that zone right now, and it wouldn't be unusual for us to come back and retest it somewhere in the 190s by that next event date. Tracking Tesla, we're using an indicator here. It's not the TachEon Warp. However, it is predictive. This is the Orion tool from the alpha package in our Force offering presently. And this is measuring lunar distance, in particular apogees and perigees. And you'll notice here that the last apogee event was on the 21st of November. And now we're in a, the perigee event. The next apogee event was right here. And you'll see that we do have these 3 structural trend lines in place. One of the things that you can do is use that trend channel if you want. So we're not expecting anything volcanic to occur until December 15th, which again ties into what we're seeing with Apple a moment ago. So that the 12th signal here, the 15th for Tesla, those 2 things sort of coming within a few days of each other. NVIDIA has been pretty interesting. It's sort of leading in that it's before the 12th. It's going to be on the 11th here today. And you'll see that signal coming up. And we'll put a vertical line here just to keep track of it. Warp tells us when the signals are coming in advance. So you can see in the right-hand side of the screen, the next signals are coming out through January and February, buying and selling signals. These dots don't tell us where the price will be. It just sort of follows along at the same distance from the height of the present candles. So these distances are sort of equal from the center line here of the present price bar. One of the ways that we can use to predict where price will go is to measure how far the market moves when we get to these signals. How high does a white dot go when it goes? And what you'll notice here, from low to high, we can start to collect these things and aggregate them over, did I do this one yet? No. We can create an aggregate of where the last moves have gone. And so as we come into NVIDIA, we did this for the last signal here on the 21st when we were focused on it in September. and we predicted a target between 462 and 480. And right before that 1017 signal, we got within a few dollars of that high, kind of terminating in the middle of that zone. And so same thing happened over here. So when we get to that 11th signal, very good possibility that we're going to come up now with NVIDIA somewhere between 521 and 537.57, just using that technique. I refer to this as an exertion technique. We're just measuring the exertion of every one of the predictive buying and selling moves, right? And you start to get a sense that when the banks buy and sell, they're following a pretty nominal program. So from high to low in each of these instances, if you're interested how far the selling was expected to go from selling signal to buying signal, you can now create an aggregate here and over here. We could sort of collect those arrows and have them, I'm missing one, there it is. We can sort of have them on tap. So the greatest part about this chart is it's entirely predictive, right? We have a plan coming into the 11th right now. And if we're using any kind of structure whatsoever, we could, for example, see there's a trend line right here that's being respected. There's another one right here that's being respected. And so as we get closer and closer to that 11th mark, it's not entirely unreasonable based on way banks move at these times historically and what's projected to occur for that to occur. Now, in the pro room, if you're a customer and you're not in my pro room, first of all, shame on you. We've detected something with regards to time cycles that we're going to look at here intraday in a moment. There is a moment where the signals can become inverted. They go in the opposite direction. I want to show you an example of that here. If we look at gold, for example, on a daily chart with the buying and selling signals, in this case related to full moons and new moons. I'm all over the place today, but I hope you can keep up. There's a point where everything is working right. So up at the green, down at the red, up at the green, down at the red, up at the full moon, down at the new moon, down at the new moon, up at the full moon. You guys get it, right? Well, right around here, there's an interesting phenomenon that we've brought into the work product that I want to show you on the ES chart here in a minute. When we get to the predictive times, what happens is the cycle can invert. And you'll notice here at the new moon, gold drops. At the full moon, at the new moon, gold went up. At the full moon, gold went down. At the new moon, gold went up. And then right here at the full moon, gold went down. Patrick, can you see that? Bob, Michael, Pablo? Hey, Ron Armstrong. Sammy, good to see you. Stanley. So Stanley, can you see where the cycle is flipping? Meaning if we come here and we put a green arrow or a green dot underneath the sell signals and a red arrow over the buy signals, everything is backwards right now. Does that make sense? It's something that I'm getting very good at spotting, and we've actually incorporated something into the work program that I'm going to show you in a minute. So if I get rid of the signals here, Stanley, does this make sense? I need a little bit of feedback here today. Jack, Ken, Kosh, is this thing on? I think so. If that's the case and the cycle is inverted, it means that the next lunar signal, when we get to it, is likely to be what? An up move at the new moon. It's backwards. And so I wanted to preface that by saying we've been tracking that in Bitcoin now since November. In November, the blue dot went up, the red dot went down, and then Sammy, the blue dot, went up. And it's expected to continue higher until December 15th. Every one of the signals in Bitcoin is opposite. And that's called reverse polarity. And that's important because we're going to actually reference that here in a second. So in predictive time signals, sometimes there's a little advanced stuff, but we don't run from that. We kind of lean into it because there's some really good opportunities if we understand what's happening. So if we come in here now and delete the signals, Sammy, this is pretty good stuff, right? So this reaccumulation phase right here makes sense. The push up here makes sense. The breakout and the push up here makes sense. So we know that Bitcoin has a little bit more to go until December 15th, which is interesting because if you look at it from an institutional perspective, Earl, that's when all the money goes back into the stocks. That's when Nvidia is supposed to go up, Apple's supposed to go up, Tesla's supposed to go up. So it seems like there's a flight to safety in Bitcoin driving liquidity higher and higher and higher. And then when it's at a feverish pitch, the banks are going to come back into the stocks towards the end of the year for, it looks like, a Santa Claus rally. SPY, we arrived at the signal today, the 6th, and this is where we're at for SPY. We'll clean up the chart a little bit. This signal on 12/6 was a prior predicted buy time, and we're now anticipating that to last until January 1st. So if we do an exertion analysis, just like the ones we had done before, we'll kind of just do a rudimentary one here. That one didn't go up at all. Let's try and snag one more. Here we go. I'm expecting SPY now minimally to go to the smallest white arrow. We usually get a min, a max, and a median, right? And so minimally on SPY, before January 1st, we're expecting it to achieve right here, 467.48. Median is somewhere between 472 and 475 on or before January 1st, and maximum, Lord help us all, 490 to 498. So again, entirely predictive. We can see the signals coming up to the right, and the only reason we believe them is because what has been happening historically in the past when we had those predictive signals. NQ is fun. We've been looking at the NQ for a while. Here's a cleaner chart. And this is, again, a daily chart for NQ. And you'll notice that we have now, in hindsight, of course, what would you guys call this pattern right here? Starting on November 20th, when we predicted the move to start coming down. Anybody know the name of that pattern? Bueller, Bueller, Bueller. Here you go. That's called a bull pennant or a bull flag. When's the flag supposed to break out? Anybody?
That's right. That's kind of cool that we know that, isn't it? So one of the techniques that I use when I have signals to kind of get more resolution is I split them into thirds. And when I do that, I can sort of see that we had a pattern 5 here, meaning it was expected to come down for a little while. And then lower low, let's call this pattern 4. Based on that. So that's not really helping me much right here, but I know as I get closer and closer next Wednesday that I can use the bodies of the candles or the wicks of the candles. I tend to favor the bodies of the candles, and the wicks are sort of distractions to me. But if that's the case, from buy signal to sell signal last time, from this to this, we could get, if we're anywhere in the ballpark, 16,800. If we're up here still, we could be hitting 17,000 by the end of the year. But we know when that move is likely to start and when the false breakouts are likely to occur. So that's where we are on the NASDAQ, which is kind of cool. Euro US dollar got above its 120 period moving average, but the last signal was a liquidity run right here. We had a stop run at the double top, and now we're moving back down until December 15th on the daily chart. Sort of had this pullback here, push up. We took this split technique and we brought it over to here. We can pop this over one. There was an intermediate sell and then a huge bull candle up. And so now we're back retesting that 120 period moving average. 1215 is the next expected buy signal on the euro. Whew. Any questions so far? This one's kind of weird. It's one that we've been tracking in the pro room. This is the TachEon daily cycle marker tool from our alpha package in the force offering. This tracks the 4 phases of the moon. The 4 phases of the moon. Everywhere you see a large red dot is a new moon. New moon, new moon, new moon. This one's off one day. I don't care. New moon. This one is a full moon, full moon, full moon, and then a full moon right here. It's kind of interesting to see how the ES actually tracks that. One of the things we can do is we can look at the minor phases of the moon. I know this sounds crazy. Believe me when I say I know this sounds crazy. If we turn off the full moon and the new moon and we just leave the first quarter and third quarter though, Ken, what do you think of that? Chris, this is when the moon is half full and half empty. Half full and half empty. It's pretty weird, right? I will be the first to admit that's pretty freaking messed up. But the cool part of it is we're kind of leaning into the presentation here now. Studying human behavior is a profitable endeavor if you have an open mind. Let me say that again. Studying human behavior is a profitable endeavor if you keep an open mind. Why do people do what they do? When do people do what they do? If you know something about somebody else that they don't know about themselves, right?
it gives you an advantage, gives you an edge. When I was an engineer, my former employer was very dissatisfied with the state of his sales team. And he sent me to sales school with a guy that he'd met that he felt really comfortable with and was a good salesman. And one of the things that, his name was Glenn Matson. One of the things Glenn taught me is that when people are telling a lie, if you're talking, say you're selling a car to somebody and they say, oh, I can't afford this car, they'll have a histamine response. You guys know what histamine response is? Anybody familiar with this? What do people do when they're not telling the truth? Their body produces a histamine, and they scratch their nose, they sniff, they rub their face, right? It's a cue. And they do it subconsciously. Yeah, they get itchy. And you can go, we both know that's not the case, Bill. Yeah, that's true. And so JP Morgan understood something about population centers, about the human species as a whole, that most people to this day don't want to admit. Even when I show them this chart, they're like, it's impossible. That's a bunch of hocus pocus. No way. Blah, 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 blah. But if I showed you this chart and I told you that it was driven by AI and could predict when the next move was coming in the E-mini S&P, you would go, oh, AI. Oh. No, 12 days from now, there'll be another green line. And what's going to happen on the ES? It'll close higher and then it opened. Well, how far will it go? Well, we can measure how far did the move go from its low to its high inside of that range, right? Fun fact. There's the low of the signal to the high, low of the signal to the high, low to the high, and we can create an aggregate. Look at that little guy, hardly went anywhere. From the low to the signal, from the low to the signal. Now when we get to that next signal, let's say the candle was exactly where we are right now. It won't be, Lord help us. But if we're over here, now Earl, watch. I'm creating a behavioral footprint of how far the banks push prices when we arrive at that uncomfortable nose scratching date, right? And you're going to notice that there's a median, a minimum, and a maximum. Happens every time. There's a minimum amount they move, a median that they usually go to, and a maximum. Watch this, Ken. Where's the minimum? Right here. Where's the median? It's kind of right here, right? There's 3 or 4. Where's the maximum? Somewhere up here. So when the next first quarter lunar phase gets here, minimum, median, maximum. And who cares what causes it? Who cares? It's working. It's predictive, and it can tell us what's happening next in the market. So one of the things that we do, we try to make it easy for traders to make more money. Ultimately, that's our goal. I want you to feel comfortable making more money. And so if you've researched us and you don't own the software, you'll find that a lot of people come back and they leave reviews for us. These are real people. We're not allowed to post fake reviews. Trustpilot has this really fancy system that keeps vendors from posting their own reviews to the site. And we're not allowed to delete bad ones. And so why do people keep coming back and giving us 4 and 5-star reviews? Sometimes a 3, we got a 1 in there too, but anyone who takes the time to write a review generally leaves us a good one. Well, they do it because of the following. Once a week, and I'm not going to pull up the webpage. If you're here, you've already been watching it. We give people the times in advance for a bunch of markets. You see, it's real easy to say something after the fact, right? It's real easy to say after the fact, hey, this happened and we told you it would, and forget all the bad stuff. Well, on Tuesday, we sent out an email, and you guys that are doing the trials, you've been following along, you had access to this chart for the E-mini S&P since Tuesday afternoon, I believe. And so the software was going back across thousands of historical bars and saying, hey, are there any times, any patterns in price action with regards to the E-mini S&P on a 3-minute chart? Are there any times lately in the last several thousand bars that banks are consistently pushing price higher and lower? And so for Wednesday, today, on the 3-minute E-mini S&P chart, these were all the times on the bottom that the software was warning us the JP Morgans of the world had a plan. And these signals on the top were the times that the program was warning us that the JP Morgans of the world were likely to push prices lower again. And so when we come here 2 days later, this is now the chart for the E-mini S&P on a 3-minute chart. Some interesting things really start to occur. Okay, we had the report at 8:30, right? Unemployment report or job openings. I lose track of all these shenanigans lately. And so the signal at 8:03 that we were warned about since Tuesday is in the direction of the trend. Now, most of you that are making money are trend traders. I pay very close attention. Why do you sell the software if it's so good? Well, here's a secret. When you sell software to traders, eventually there are 3 groups of traders that you get to interact with. Here's a little peek into how the sausage is made. When you get to talk to traders, here's what happens. In the giant circle of life, there's this very small group of traders who are excellent. And then there is this swath of traders who are going to waste your time. They're just professional gamblers. And then everyone here is kind of good, you know, scratching along, making more money than they lose. I have access to these people, and you can learn a lot from those people. Right? I can teach people things, but I also learn a lot from those people. And one of the things I've discovered from interacting with the sort of higher tier of traders is that I would say about 70% of them are trend traders. So if the market is moving in a direction, they're buying or selling in that direction. So at 8:03, the program warned us since Tuesday, hey, before this report's released, the JP Morgans of the world have a plan. And historically, they buy between 8:03 and 9 o'clock Eastern. Fun fact. So if we buy at the close of the 8:03 candle, we can sell by the close of the 9 o'clock candle. There's a time window. There's a timing window. How many of you remember the movie The Dark Knight with Heath Ledger? It's one of my favorite movie scenes. And while it's happening, these guys are watching their clocks. From the moment they walk into the bank, they have a countdown timer. Everything happens at a precise moment in time, tick, 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 tick. And then at the very end, Heath Ledger says, no, mine's supposed to kill the bus driver. And everything happens in precise time increments? Well, there's a window that the software warns us about. Whatever market or time frame you're trading, if it's NASDAQ or Apple or NVIDIA or Microsoft or SPY or QQQ, you can generate these reports from the smallest to the largest of time frames, daily and even weekly reports. And so we knew there was a window of time where buyers or banks were likely to be buyers. Okay, so if we enter at 8:03, our stop is a dynamic stop, at least the way it's programmed here. It's set 1.5 average true range values below the candle. So if the range of a 3-minute bar is 12 ticks, the stop's going to be 18 ticks away. If the range of a 3-minute bar is 100 ticks, the stop will be 150 ticks away. And so we get through that unemployment job openings report, tick, 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 shebang. And now we're out by 9 o'clock with 9.5 points. There are two ways to trade in between 9 o'clock and 9:48. The first way is called a puncture trade. I want you to see what I mean by a puncture trade. At 9:48, this is equivalent to what we said earlier, like a bull pennant or a flag. This is what's known in Wyckofian circles as a reaccumulation phase. People are selling at the highs, taking profit, and then they are buying at the low. And eventually there's a demand imbalance and we go higher. So what I look for is I place a buy order 1 tick above that stop line. Because if we burst through it, it means that all of the selling has already taken place. We're too far away from the stop line here. And so I would buy at the breakout above that blue candle. Okay, fun fact. My stop would be 2 ticks below the candle that broke out. And if you bought here using that technique, you got as high as $6 or $300 per contract. There's a simple thing you can do. You can analyze your risk and go for 2 to 1 on your risk as well, in which case you would have clocked out with 3.5 points. That's one way you can trade that signal. The other way is to use a technique that I've taught some of you in the past, which is to split the distance between 9 o'clock and 9:48. So Earl, if I split the signals between 9 and 9:48, there are 2 lines on this chart. The first one is at 33% of the distance between the 2 signals, and the other one is at 66% of the signals. And before you say, well, hey, that's hindsight, well, not really, because look, I can take a signal that exists right now and the future one at 6:42 Eastern, and I can split it. And Earl, if the market is falling, I can use that as a sell signal and now hold it until the 66%. And I can do that in the future out here as well. I can take any 2 gaps in time and I can split them into thirds, which gives me more resolution into the signals if I want, but I digress. If you were going to take a long here, you could do the same thing. You could put the stop right below the candle, and now you could hold it until the close of this signal here, which is the 66% candle. So if you did that, instead of $3.50, you would have made $5.25. Pretty cool. Now, how much of this is based on a lagging indicator? Just this guy. We are trading when the banks are trading. We are trading when this guy's great-great-grandson or whoever's in charge now, Jamie Dimon, I think is the dude's name. When these guys mash the button, we're in. these behavior patterns are based on what almost always happens lately. And if there's anybody driving what almost always happens lately, who is it? It's the banks. I don't think it's a big stretch to say that. At 9:48, the trend is up. The white line is steadily ascending, higher highs and higher lows, however you want to categorize or organize, define what the trend is. It's up at that point. And so now we have a decision to make. The close of the candle is at 45.7225. The stop is 1.5 ATR values away at 67. If you put it one tick below. And if we enter at the close of the candle, we have another Heath Ledger tick, tick, tick moment. The clock starts at 9:48 and it expires at 10:21. So we enter here, we exit at the close. I'm supposed to kill the bus driver. Boom, there's 12 points. Okay, remember, we had all of this information in advance. At the time on your screen at the close of the 10:21 signal, none of these price bars are here. There are no price bars on the chart at this point. I'm going to say it again. There are no price bars on the screen. You just see the close of the 10:21 signal. And in the future, you see 10:48, 11 o'clock, 11:18, 11:51, right? And so right here, we're out at 12. The next signal occurs. The close is 10:48. We are out by 11 o'clock at 1:50. Sammy, check it out. If you saw this high right here, right, and you saw the sell signal at 11 o'clock, your risk is what? At that point is 3 points. As we get closer and closer, it goes down to 5 ticks. We could short here when the risk is that low. And you know the window now is a selling window. But this is not a counter trend academy. Very dangerous thoughts that we're having right now. Oh, we'll just take that off the screen. But is it safe to say, Sammy, at 3 o'clock, the market dropped at 11 o'clock, 2 days after the software warned us that the JP Morgans of the world had a plan? And was there any way for me to fake that or the reaction that occurred 2 days later? No, right? Is this a little bananas? Yeah, we look at 5-minute chart, sure. Okay, what do we do at 11:18? What direction was the trend? What direction was our only lagging indicator telling us? Up. What is 11:18 warning us will happen? Go higher. Until when? 11:51. Heath Ledger tick tick moment. The clock starts at 11:18. We have until 11:51 to rob the bank. Then we have to get out before the police arrive. Candle closes. Our stop is below the white line at 45.68 quarter. We exit by 11:51. That's $11. So $9. If you count the 5, it's 14. If you don't, it's still 9. 21, 24 plus 10 is 34, 35 hypothetical dollars of movement times $50 per contract is $1,500 per contract today. A gloriously trending day. Any questions about the fact that these signals were known in the future? Now, if you don't trade intraday, if you take larger signals, then what? You can look at the larger time frame. And the larger time frame is telling us that price was expected to drop between where and where. Close of the candle on December 1st until December 11th. What's going to happen on December 11th? Same thing. We can also, again, do an exertion analysis and measure how high did price go from the low of the signal to the close of the next signal. And we can create an aggregate now of how far these signals have gone. And now when we get to the 11th on the daily chart, if scalping or intraday trading is not your bag, we already have a median, a minimum, and a maximum. It's already there waiting for us on a daily chart. There's the minimum. Median is kind of here, and there's the maximum. This setting is the only non-standard setting you'll see today. So Mr. Sasser, this is set to trading days for origination mode. 1, 2, 3, 0. 1, 2, 3, 0. With a swing strength of 5. Go ahead and write that down for me if you wouldn't mind. You got it? That one works really well on the ES daily chart. Any questions about that? Good. Sammy, you ready for the 5-minute? Swing. Everything else, Ron, that you see me talk about is a 714 swing strength 8. 678. 714 swing strength 8. Ocho. Interesting. Okay, now 625 was the 5-minute signal. It's a little earlier, but we'll put it in here. Close of the candle, Sammy, tick, tick, tick. I killed the bus driver. 8 o'clock, we're done. 8:05 comes, it's a reaccumulation phase in an uptrend. Market goes into, we look at the bodies of the candles, a zone that big. We know that zone can't last forever. At some point, it blows up. The tire can only hold so much pressure. If we use the puncture method, 1 tick above this blue line, we go long. Our stop is 1 tick below the candle, 2 ticks below the candle, which punctured it. And when do we hold it? We can get out by the next signal, or we can use a 2-to-1 risk-reward ratio, put the stop below here. Is probably the better way to go, and get out by there. Okay. If you use the split technique between the blue and the red, it's about the same amount of profit, right, Sammy? In at the green, out at the red. Stop below the green candle. Same difference. Okay. Next signal at 9:50. What direction are the JP Morgans of the world going? They're going up. What did the computer warn us about? But it's curling over. They're not going to go higher. I'm going to go short. This is clearly the top. The top is clearly in. Honey, we're going to Disney World on all of the profits I'm about to make. Son of a bitch! And it goes straight up again from 950. Sorry, language. Close of that candle. Stop is 1.5 ATR values away. You exit at 1020 11 points. Sammy, very similar to the 3-minute chart, in at 10:50, out at 11 o'clock. It's only a 10-minute signal. You only get 4 ticks out of that guy. We come up to the blue line, we do not go through the blue line. We enter at 1 o'clock, it goes up, down, up. The highest it gets is $350. My break even would be 500. So Sammy, in the webinar, I have to hold this one until 3 o'clock and give 5 ticks back. If I get in the 3:30 signal, it's a stop out. I give 4 of those back. So if you count it after the open, it's 11.50, 12.50, -2, 10.50, -4, 8.50. So it would be a $400 day on the 5-minute chart. Any questions? It's not just today either, it was yesterday. We could have done the same thing yesterday, Sammy. You see all the trend signals that we could have gotten involved in? Short from here to here, 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 puncture from here to here, short from here to here, stop out here, stop out here, long from here to here. Using the same signals. So 9, 21, 27, 35, 39, -7, 32, -6, 26. So this is a $1,000 day yesterday. And then today would have been +400 on the 5-minute chart. Could you have done well with your Apex account, Sammy, if you'd followed those signals, do you think? Versus tracking the lagging indicator garbage that everybody else sells? Self-funded, understood. Roger that. Roger that. So, no, you could do you could open an Apex account and just trade this on it. Take someone else's money. Trade someone else's money. That would be cool. A lot of people here are trying to. No, it's not bad. And this time of year, Sammy, they offer 90% off coupons too on those accounts. So yeah, 5 and 15 is good. If we open up a 15-minute chart, yes, we can run that same analysis on there and get a sense for what the signals have been doing. Yeah, whoa. Okay, not too bad. Sammy, it looks like the JP Morgans of the world had a 15-minute plan too. Wouldn't you say? You can know before the moves occur when the moves are likely to occur, because over here, these are the times that are waiting and you don't get them. Any questions about that? Any questions about that? Okay. No, Sammy, I've been using these settings for 15 years. I haven't changed the settings since 2009. If you're a Flux customer, you know that our max weeks was 2 weeks way back in the day, and I used a 120. You do have the ability to alter settings if you want, but I don't. Once you use, and the default one is really good for most markets. I know you're not interested in oil, but No, there's no repainting. There's no signals disappearing, reappearing. It's all malarkey. We want it to be easy. We want to get the information in front of you. We want you to take advantage of the settings that have worked well for 15 years, right? Don't reinvent the wheel. Any questions about this, guys? Yep. So always to the right, there's about 12,000 lines of code that are working to do this for you. And so our edict, our design edict has always been put the signals on the screen and get out of the customer's way. Put the signals on the screen and get out of the way. Sammy, what a lot of people do is they'll get rid of that histogram altogether. And so now we just see the signals coming on the right-hand side. So there's even less stuff on the chart, right? So all you have to do is put the market that you're interested in, change it to the time frame that you're interested in. And now you can see those signals. But no, don't adjust things. If you're let me just make a public service announcement. If you're adjusting things during the session, you're not trading. I can understand drawing a trend line. That's great. Drawing an SR level, perfectly reasonable. But if you're adjusting the settings of your indicators, what that tells me, especially from a vendor perspective, we've been trained to accept this, right? We're sort of Stockholm Syndrome victims. What they'll do is, and I fell victim to when I first started trading, there was a company that was ruthless with this. I mean, shamelessly ruthless. So, Sammy, they would show in their marketing, they had like a chart that looked like this, and they had a signal here and here and here and here, and it looked incredible, right? It's 100%. And it was on the ES 4 range chart. And I'd say, oh, it was like E-mini scalper something. This is 15 years ago, forget my memory. And then next week, Sammy, I would get the email from them. This was before Facebook and everything now, TikToks. And they would show this, and there would be a signal here, a signal here, a signal here, and a signal here. And then Sammy over here, it would say ES 12 range. And I wrote the guy an email, and I said, how do I know when to change it from a 4 range to a 12 range? Any of you ever have this conversation with a vendor? Anybody? Just me? How do I know what you know in your mysterious, cavernous guru brain? Is there anything in the program that tells me when to change it from a 4 range to a 12 range? Next week, I didn't get any emails. I was taken off their list. So no, please don't change the settings during the session. Please don't change the settings during the session. Much of what you're going to see here across everything else, whether it's the euro dollar on the 60-minute chart or Bitcoin on a 5-minute chart, most everything else you're going to see here is identical in terms of accuracy with what I've been showing you earlier on all the markets. So if it's Bitcoin on a hard run day, you're taking advantage of that. If you want to sell the highs and lows, you can. You have a 5-minute chart is too low, you want to swim with the fishes in the deeper pond, you can go to a 30-minute chart or a 60-minute chart. The accuracy is the same across all time frames. Well, I got to know when to get in Bitcoin. I just feel like every time I get in, it goes in the opposite direction. Get in at 10 o'clock, get in at 5 a.m., get in at 9 o'clock, get in at 11 o'clock, get in at 11 o'clock, get in at 8 o'clock, get in at 11 o'clock, get in at 10 o'clock. Get in at 7 a.m., 10 p.m., and 1 p.m. That's when you get in. And these times aren't based on some mythical AI-based piece of crap marketing hypey hype thing. They're based on the times the JP Morgans of the world are doing it lately. Tick tock, I killed the bank driver. I killed the bus driver. Oh. Any questions about that? It works on the gnarliest of markets. I'm an NQ 1 minute guy. I love the NQ 1 minute. Oh, so choice. It's amazing. It either works right away or it doesn't. I love that it works right away or it doesn't. And so for me, this is what I like to do. And so Sammy, just so you know, the settings are the same. 7, 14, 8. Would you like to know what those values mean? What those numbers reference? It'd be surprising. Yeah. So when the software is looking back in time, we tell it where to look for patterns. So imagine a calendar. So today is Thursday. Sammy, a 714 says, go back and look at last Thursday and the Thursday before, 7 days ago and 14 days ago. Does that make sense? So as soon as the market closed last Thursday, we had all the data we needed for the analysis today, which means how old were the forecasts when we were trading with them today? You can say it out loud, it's okay. It's okay. The forecasts were 7 days old. We've been waiting 7 days. I have the times right now for Friday, for Monday of next week, Tuesday of next week, Wednesday, and Thursday of next week. They do not change, they do not update, they do not disappear. So a 714 says go back 2 weeks worth of Thursdays, 2 weeks worth of Wednesdays, 2 weeks worth of Tuesdays. And when we did that, that's what happened on the NQ today. When we did that, that's what happened on the ES, right? These are all 714 analyses. And the more liquid the market, the more corrupt it is, the more predictable it is. I know that. I stake my life on it. Stake my life on it. I built a company based on that. If you would like the tool, there is a ridiculous end of year discount available. If you bought it already, you are not eligible for this. You know how end of year sales work. They occur at the end of the year. When you click on this link, TachEon Warp, our flagship product, boom, boom, boom. Let me open up the chat box. Here is the link. If you click on that link at the very bottom of the page, is a buy now link. Buy now at $24.95. If you click on that link, you'll see there's an option to go to a trading room. It's run by my partner or my customer, Colin. I also have my own trading room now. We have 2 rooms available. If you're a customer and you want to come hang out with me 3 days a week, you can. If you don't want that, go to checkout without it. Click on OK for the purchase agreement. And then for the promo code, you're going to type CY lowercase, CYBERWARP, CYBERWARP, CYBERWARP. And when you do that, it takes $1,000 off of the price. What? Yes. Everybody waits till the end of the year because they know we do this. In biblical terms, this would be referred to as gleaning the field. The farmers would leave the corners of the field unharvested so that the less capable people in the villages, the widows and orphans and so forth, could come out and pick remnants of the harvest. This is gleaning. This is your one chance. You have 23 days to lock this in, and then it disappears. And here's a fun fact, price goes up next year. We haven't increased with all this inflation garbage at all. It's been the same price for like 10 years. So not only will you pay more, you will pay a lot more. This was what one day of trading the E-mini S&P was today with one contract, hypothetically. One day of trading. And some of you will sit here and go, I don't know if I should do it. It's a lot of money. Most of you will lose this money between when the webinar ends and when I go to the bathroom. You are that good at losing money. Most of you will let all of the big opportunities go tomorrow. You will miss all of the big runs, all of the trend moves, and you'll sit there after the fact and go, I'll bet there was a time signal there. I don't get it. I don't get why you do what you do, but you do it. You keep doing it. Yes, Larry, the story of Ruth, exactly. So that's available. It's 2 computer licenses, lifetime licenses. Ninjatrader, you can use the free version of Ninjatrader. Ninjatrader allows you to connect to TD Ameritrade, Interactive Brokers. You can also, excuse me, you can also connect it to your Apex account. So if you do have an Apex account with the 90% off coupon, it's like $15 a month. You'll get the data to watch these markets, and then you can trade with like TradingView or another platform if you want, but you'll still see the times. You'll still see the times coming up in the future. And why would you not want to know those times? I don't know. Some people don't like knowing. They don't want to know. It's more of a adrenaline rush, I guess. It's more like gambling than it is trading for some of you. But again, I'm not talking to that person. I'm talking to the guy, talking to the Sammys of the world who are professional about it. They treat it like a business. They see the advantages of it as a tool, right? Like an architect or a carpenter has a set of sharpened chisels, a certain size framing hammer, all the tools that he needs to get his job done efficiently and effectively. This is a tool. That's all it is. But the other thing to bear in mind is that it's a tool that many, many, many other people have gone before you and tried. And at the end of the day, they're all saying the same thing. They sat in the seat that you're sitting in. They saw the same webinar you saw. They had the same experiences, and they went one more step. Everyone went one more step than you if you don't have the software. And they came back unprompted, unrelated financially to me, unrelated physically to me. And they said the same things. So if you need that kind of feedback before you make a decision, Sammy, those guys have gone before you in the trenches and let you know it's going to be okay. That's all I got for you. If you want to take this guy's money, I'm all about helping you. If the answer to this question is a yes or no, do institutional behavior patterns exist? Can we use predictive times to analyze when stocks, when futures, when forex pairs, when cryptocurrencies are going to go up or down and be right most of the time? The answer is yes. Again, 15 years, over 600 webinars. The answer is always yes. I never sit here and go, well, it didn't work much this week. It was a bad week. It's always the same webinar, always the same results. So I hope you're encouraged by that. If you're looking for additional edges in your training and your trading, we can help. May the wind be at your back. May the sun shine on your face. May the mountains lay low before you. May the valleys rise up to meet you on your journey. I wish you peace. I wish you health, long life. I wish you an active, fulfilling life, surrounded by friends and family and community, surrounded with purpose, surrounded by completed goals, and just enough stress to motivate you to do better, to be better, to feel better. We live in a crazy time right now, and if my predictions are right, it's going to get a lot nuttier in the next 12 months. The poop is about to hit the fan, and we need each other more than ever. Be kind, spread kindness, sow it like Johnny Appleseed. May it return to you 100-fold. This is my prayer for you today. Have a great night. Welcome on board. Sammy, join. Sammy, if I wake up tomorrow morning and I see you're not a new customer, I'm going to be highly dissatisfied. I really am. It's going to ruin my whole day. I swear to God, don't make me find you. Come on, brother. ES, this is Jesus, Muhammad, and the Kwanzaa tree reaching down to you, saying, please take it. Please take it. I love you. Whatever you end up doing, I'm just teasing. Have a great night, everybody. Take care. Bye-bye.